Good morning, students. Let us understand exercise problem 27 and 28. This is calculation of interest on partner's capital. So let us understand the calculation. From the following extract of balance sheet, problem 27. From the following extract of the balance sheet of Neelkant and Madhav as on 31st March Neelkant and Mahadev as on 31st March 2020. Balance sheet as at 31st March 2020. Neelkant's capital 10 lakhs. Mahadev's capital 10 lakhs. Neelkant's current account 1 lakh. Mahadev's current account 1 lakh. Profit and loss account for 1920 is 8 lakhs. So you see here that profit has not yet been distributed. The profit and loss, that is profit as shown by profit and loss account, is kept in profit and loss account only, and this has not been distributed. This is accumulated profit, and the credit balance of profit and loss account is shown on the liability side of the balance sheet, and sundry assets is 30 lakhs. From here you can understand that the firm is maintaining their capital accounts under fixed capital method because they have capital accounts as well as current account. So capital is fixed, and since profit has not been distributed, therefore this has not been credited to the current account. Also, during the year Mahadev's drawing were 30 lakhs, 30,000. 30,000 is Mahadev's drawing, and you know that the drawing goes to, this is drawing against profit since it is written drawings, and I told you that if not mentioned specifically, it is always assumed drawing against profit. So this 30,000 will go to current account. This will be debited to the current account. Profits during the year ended 31st March 2020 is 10 lakhs. Again, this profit of rupees 10 lakhs must have been distributed in their PSR, and it must have been credited to the current account. So here you can see that the current account is to be debited by interest on by drawings and the share of profits. And since we are required to calculate interest on capital on the fixed capital balances, therefore it can be very well said that the closing balance of, this is the closing balance of capital, since in balance sheet the closing balance goes, therefore it can be said that the closing balance of capital as on 31st March must be equal to the opening balance of capital as on 1st of April 2019, because in capital account there is no transaction like further capital introduced, additional capital introduced, neither there is any transaction like drawings out of capital. So we can say that the opening capital balances of Neelkant and Mahadev must be rupees 10 lakhs each, and since interest on capital is equal to 5% per annum, therefore interest on capital of Neelkant and Mahadev will be 10 lakhs into 5%, that is 50,000, and Mahadev's will be 10 lakhs into 5% is equal to 50,000. So this is the answer. Now come to question number 28. In this question, in the balance sheet, there are two partners, long and short. So in the balance sheet, you may see that long's capital and short's capital is given on the liability side, but there is no current account appearing. It means that both the partners must be maintaining their capital accounts under fluctuating method. So from the following balance sheet of long and short, calculate interest on capital at the rate of 8% per annum for the year ended 31st March 2020. Long's capital 1,20,000, short's capital 1,40,000, general reserve 1 lakh, fixed asset, other assets. During the year, long withdrew 40,000, this is the drawing, and short withdrew 50,000. And you know that since the capital account is being maintained under fluctuating capital, therefore both of these drawings will be debited to the capital accounts. Profit for the year was 1,50,000, out of which 1 lakh was transferred to general reserve. So let us calculate the drawings. Interest on capital. So first we are required to, since this is the closing balance sheet on 31st March 2020 and the capital account balance is appearing as on 31st March 2020. So we cannot calculate interest on capital on this closing balance. For calculating interest on capital, we are required to calculate the opening capital of both the partners. And for that, you may prepare capital account in working note, or you may prepare the statement. I told you that it will be better if it will be easier if you prepare the capital accounts. And since it is a fluctuating method, therefore capital accounts, and only one capital account will be prepared, and you prepare it in columnar form for long and for short. Long, short. And you know that the closing balance have been given in the question. So this balance sheet closing balance will appear on the debit side as two balance carried down, 1,20,000 and 1,40,000. Now read the question. During the year, long withdrew 40,000, and you know that drawing against capital and drawing against profit both is debited to the capital account in case of fluctuating method, and since nothing is mentioned, then it is assumed that it is a drawing against profit. Whatever may be the case, it will be debited to the capital accounts. So in long's column it is 40,000 and in short's column it is 50,000. Now profit for the year, it is saying that profit for the year was 1,50,000, out of which 1 lakh was transferred to general reserve. So when we were preparing the profit and loss appropriation account, profit and loss appropriation account must be created by 1,50,000 from profit and loss account, and then we have transferred 1 lakh to general reserve. Therefore profit and loss appropriation account must be debited by 1 lakh, and after that whatever remaining balance of profit and loss appropriation account, that is 50,000, must be transferred to the partners as divisible profit in their profit sharing ratio. And in this question, since profit sharing ratio is not given, therefore it will be assumed to be 1:1, and therefore 25,000 must be credited to their capital accounts. So by profit and loss appropriation account, share of profit in 1:1 ratio, that is 50,000 will be transferred in the ratio of 1:1, that is 25,000. Now find out the opening balance. With the help of these data, we can find the balance brought down, that is opening balance, as balancing figure. 1,20,000 plus 140, 1,60,000. 1,60,000 minus 25,000, 1,35,000. So 1,35,000 is the opening balance of capital. This is the opening balance that we have calculated for long, and for short 1,40 plus 50, 1,90,000, and 1,90,000 minus 25,000, 1,65,000. So this is the opening balance of short. Now interest on capital will be calculated on this opening balance. Therefore, calculation of interest on capital long's interest on capital will be 1,35,000 into interest on capital is to be given at the rate of 8% per annum. Therefore, it will be 10,800, and short's interest on capital will be on 1,65,000 into 8%, and that will be 13,200. So in this way you are required to calculate all the questions from 13 to 30. So this is your homework, which will be running homework, and wherever you get any problem, you find any problem in any of the questions, you may ask me. I shall solve it for you. Thank you.